I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FinRecipic. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There's the position disclosure. I got out of Mara in front of this earnings report. Shouldn't have been in it to begin with, to be honest. Took a loss in it. And I got into TNA, into some TNA. All right, just wanted to get through that real quick. Snap getting smoked. Snap dead. Sorry, I gotta trade some of this stuff here a little bit. Roku up. Snap snapping back a little bit. Oh my god, I got partialed in Roku to get out there. Oh man, that snap is. Remember, it had one earnings report where it went up. Did it once. Well, that was unusual. Back to normal. Back to normal. Only down 25% on this earnings report. Wow, Roku selling back down. This is so hard to juggle these names. Square looking a little mixed. Amazon's down. Mara's up. This snap is always so bad. It's like wild. What do you mean move it? You know, a lot of times on these super hectic earnings days, on the Apple earnings day, it's actually Apple earnings day is usually the one day per quarter that I actually cancel the afternoon meeting, so we can just focus on these reports. But we don't typically have all these guests in here, so I'll see what I can do. But you know, I gotta manage these positions. I'm trading pretty actively right now. But they'll slow down a little bit. Oh, we had Intel too. I didn't realize we had Intel also down. This earnings season is becoming a disaster. Intel, Amazon. I haven't looked at these Amazon numbers though. EPS beats. I'm out of Roku. Wait, no, I'm not. Why did that just do that? That's weird. Oh, I know what happened. Re-triggered my thing. DraftKings buyback. A lot of times they'll bounce them back on a not great earnings report if it's coupled with a buyback. Roku still bouncing. Did I just all of a sudden get a bad print or something that triggered this? Can Tim Apple save the market again? We shall see. Whew. I got smoked today. I got pretty smoked today. One of my worst days in quite some time. This market was very, very hard the way they sold us today. Mercado Libre. Mercado Libre. Crushing it. There's a silver lining somewhere in South America. I got filled in Roku above the high on that initial uptick. It doesn't show. I got filled for 99 shares above the high.
I saw that high on my Oldensmith, but now it's different.
The 6147 or 6149?
I saw 49.
Yeah, I got filled 99 shares at 6149. Who took me for 99 shares? Yeah, I got chiseled by someone's grandma for 1 share in Roku. After someone, that same grandma put 1 share of TNA at one point today to fill me on the offer.
Fist pumping right now. Somebody on the other end is fist pumping you, bro.
The snap is done. I haven't seen the snap numbers yet. I haven't seen the Roku numbers yet either. Let me scroll up and let's look at all these numbers. Actually, a lot going on here. Snap. Oh my god, a massive miss on that 3/4 adjusted EBITDA. 70 million, 200 million versus estimates of 110. Second quarter adjusted EPS, little beat. Daily active users, slight beat. Do we have rev guide for Snap? And you know that terrible, terrible CEO that runs that company is not going to be able to save Snap in their conference call. Snap. If anyone has Roku, I'd like to see it. Amazon, I started to look at this and got interrupted. EPS beats, net sales misses, operating income beats, operating margin misses. No, sorry, operating margin beats nicely actually. AWS, net sales beats. These numbers look fine. Do we have it? We don't have any guide on Amazon, I guess. It's comes with the call. Amazon operating margin missed. Can I just read that? Operating margin 9.9%. Estimates of 9.13%. 9.9% is a higher number, isn't it? So that's a beat. The only number that missed was net sales. An AWS beat, right? What's the problem? Thanks, Josh. Yeah, EPS is a big beat. Rev missed. Oh, they guide. Oh, they did guide. All right. They guide Q3 below the estimate at the midpoint. Guides Q3 rev. All right, there's that's what's hitting it down. Q3 rev guide and Q3 operating income guide are both a miss. Which one did you just post there, Pat? That's Amazon. Let me see Roku. Roku, net rev beats. The guide in line. Gross profit in line. Second quarter loss definitely beats nicely. They see third quarter adjusted EBITDA as a very nice beat. Roku guidance looking good, helping support the stock here a little bit. I'm actually surprised Roku's not higher on that. Snap is disgusting. This is like the worst run company ever. I don't understand how Spiegel is still the CEO. It's so bad. Oh, and we're gonna have Apple in 7 minutes, making it difficult to do a meeting. Obviously, there's a lot to talk about today. This was one of the most brutal intraday sells I almost ever remember seeing. Massive bid on BAT Y in Snap. You don't see that ECN very often. 370,000 shares coming in.
That was just below 10. That just stepped up.
Yeah, he stepped it.
Now he's on NASDAQ.
Stepped it and switched to NASDAQ. Old school. I took my there he is. Came back on ARCA, but when they pull and come back lower, you can't really believe them. We'll see. It means I can't trade Apple if I got the tape up. That was definitely some short covering into the close. You see that fairly often on the major trend days. Is a little bit of a move in the opposite direction at the end of the day, because the algorithms that were either buying or shorting that trend all day either take profit or cover some into that close. Qs are trading down. I assume that means Amazon's trading down, which it is. Yeah, Intel is like the worst company. It's also terrible. Intel and Snap. I don't know who the CEO of Intel is, but he should probably hang out with Spiegel on a special island somewhere. Never return. Alright, we got 5 minutes here until Yablika hits. Yeah. Qs are below their intraday lows right now. SPYs are down further. IWM's not really doing too much. Really doing too much on the downside. Snap snapping up a little bit. Amazon continues to be gross. Was there anything else that was particularly interesting? Besides Intel, Amazon, Roku, and Snap? Square. Square's up. Payments are back, man. PayPal. Oh, and the DraftKings one was a little interesting too. DraftKings snapping back a little bit. That buyback is going to have a hugely positive impact. I didn't look at the DraftKings numbers, but it's such a smart move. I feel like for management, when they know that their numbers are going to disappoint a little bit, to couple it with a juicy buyback, and the market sometimes kind of looks the other way. $1 billion inaugural buyback. Not really seeing. I see their fiscal revenue. It's not versus expectations though. I don't really see all the DraftKings numbers. I'm not seeing enough. But there's something in there that the market doesn't like, obviously. Thanks, Pat. So they missed on EPS. They missed on Rev. What matters more is the guidance. Fiscal year 24 guidance, revenue guidance looks like a beat. They cut adjusted EBITDA. That's kind of a big cut on the adjusted EBITDA number. I think that's the problem. Usually an increase on the rev is enough, but that's a pretty big drop on the expectation for adjusted EBITDA. That's what's hitting DraftKings down, but that buyback's got to be helping it out a little bit, helping stabilize it. Got 2 minutes till Apple. Thank you, Bill. Apple implied move 209, 227. Save us, Tim Apple. Save us. Got 1 minute to the Apple print, so no real time to do any real afternoon meeting for the moment. Like I said, this is usually the 1 day a quarter that I typically cancel the afternoon meeting. We'll see if we can do maybe some sort of abbreviated meeting if Apple's boring or something. Take it easy, Billy. See you, man. Sorry to hear that, Aiden. This happens in market pullbacks for long-term portfolios, but gives you opportunity, if you like those companies, to buy more at a cheaper price, which is, I think, the right move from an investing perspective. Like the company, you can dollar cost average down a little bit in it, different from averaging down in a trading perspective on leverage. Apple first tick looked like lower.
Earnings coming through now. EPS a beat, $1.40.
EPS.
Estimates of $1.35.
218 selling on the offer, broke. There it goes.
61.56 billion, and estimates of $60.63 billion.
Greater China revenue missed again.
Is beat as well, 85.78 billion.
Q3 rev beats, iPhone rev beats.
So looking now to the breakdown, then iPhone revenues are beat at 39.3 billion. On estimates of 38.95 billion.
Apple down now.
Revenue are beat at 7.16 billion, on estimates of 6.63 billion. Products revenue overall beat as well. Wearables, home and accessories revenue 8.1 billion, a beat on estimates of 7.79 billion. And the Greater China revenue, however, is
They look okay. I mean,
3 billion, on estimates of 15.26 billion.
I don't think anyone's too surprised in the China miss. Been obviously a tricky trouble spot.
Market trade, but down slightly on this Q3 Greater China.
Pat has it. I don't really use a squawk, but Pat's got one. Price action here initially pretty sloppy for Apple. There's not really much to read in the tape. Yeah, exactly. Apple back now to kind of after hours highs here. Cleared it. Save us, Tim Apple. Q's recovering a little bit. Let this Apple move. He is a good operator. Not really seeing too much exciting in this tape. Bring it over on the screen share side. See if we can garner any information. There was just a fairly wide spread. It narrowed down to 45 cents. Watch that 221.99 ARCA seller. It looks like a resizing seller. I don't have depth on ARCA, so I don't know if it's still there. That was 221.99. It may have just stepped down to 221.30. Watch to see if 221.30 resizes on ARCA. I didn't see if that was a big enough of a print. There's an ARCA seller in this. Apple driving it lower though. Is that 221.99 I think I said, and then 221.30. Now you got 221 buying a little bit on 220 buying a little bit on the bid. Would you expect to see that more at those whole numbers? Watch to see if the ARCA seller comes back. I'm not seeing the ARCA seller. 221 getting bid back up. That might have been it. You know, a little drive down on that ARCA seller. Finished his order if it wasn't too big, and that was that. Thanks, Bill. That 221.99, that's where the seller was, right? So wasn't there at all. Hit the 222 and there just wasn't any buying that came in. Last time 220 was tested on the downside, it bought. So we can see if 220 gets bought again. If 220 breaks, then you might see a flush, a little flush lower. It's like the last pivot low in the tape, if you will, was 220 getting bid, and it looks like it just held there again. They didn't test it very hard this time. It was just a couple prints, not enough to see if there was any real buyer. I gotta fill it in one of my other positions. Give me a second. Snap 75 cents off lows. Roku came back down a little bit. That'd be weird if they were talking pre-conference, right? Isn't the conference at 5 typically? That 220 just broke there in a big like market cross order. Looks like it broke it. A bunch of people hit out on that. Apple back to unch from where it closed today. I doubt that we'll get a buyback update today because they just did it on the last quarter, and that lasts long enough. I mean, they might give us an update just in terms of how much they bought over the course of the last quarter, but they're not going to announce anything new on that front after they just did it on the last one. Apple down negative again. What's Amazon doing? Amazon not looking great, but it's off lows. Yeah, see if Apple can recapture that 220. The 220 seems like it's becoming a kind of important inflection area. Will it hold as resistance on a retest now? Can I get it back through it? You might have to wait for Tim Apple to speak to get us somewhere. There was a big through print there to 220, so you couldn't really tell, if there was any real selling there. Never really put 220 as the inside offer. It printed 220, but it printed it because it through printed to 220. I'm mainly looking for natural buyers and natural sellers in the tape. Ooh, Arca just sold 219 again. Remember we saw that Arca seller earlier? So keep an eye out for Arca seller, 219 selling. Stock definitely got a little bit heavier again. At 220, they're not even really retesting it. After hours trading on earnings is one of the few times where I think tape reading is still like a really important skill to have. But for traders, I think they want to focus, if you're new, focus on learning charts, not tape. It's a good skill to have, I guess, in certain situations, but it's I don't think it's worth the effort. It's hard to learn. So, is Tim Cook speaking, or I'm confused? Is usually not. Oh, he's on CNBC. That would be bizarre if he's on CNBC in between his conference call and the report. Never seen anything like that before. I don't have CNBC on, so I can't even really look at it. From a data center point of view, as you know, we have a hybrid approach, and so that CapEx would be in the partner's financials. Interesting. As I said, that Apple's back above 220 here. All right, we'll keep an eye on this. The Qs are recovering a little bit. Amazon's off lows. Apple above 220 is a good thing. This is so bizarre to me that Tim Cook is speaking on CNBC in between his company report coming out and his company report coming out and the conference call. I've never heard of such a thing from any company ever, actually, let alone Apple. Very strange. All right, we'll keep an eye out of that under the corner of our eye. We'll try to do a little bit of an afternoon meeting here. I don't think you can sell puts right now. All right. So today was an absolute bloodbath. I'm sure by tomorrow we'll have all the updated statistics about how this was the worst day since whenever, wherever, whatever. We'll get to see all that fun stuff. Today was a really solid bearish engulfing candle. I mean, we were looking for the pivot high to come into the market. We said in the morning meeting, and it turned out to be a perfect call. The day after a Fed day is oftentimes a trend day. We said it yesterday's afternoon meeting. We said it again in this morning's meeting. When you first get the Fed print, you know, when they at 2 o'clock when the announcement comes out, when Powell speaks at 2:30, that's all robots going crazy. Like, the robots are dissecting every word, every sentence that gets said, and it pushes around the market with these quick whipsaw type of moves. But the big money moves their money on the Fed the next day. They take the night to think about it. The major big money managers aren't going like word by word in the moment on what Powell is saying and making decisions based off that. They take the night, they think about it, then the next morning they decide, all right, I want to be risk off, I want to be risk on, I think it's a good opportunity to buy, a good opportunity to sell, whatever. And then they put their money to work. And that is why, you know, I don't know what the actual ratio numbers are as far as like broadly in trading you have days where the market can trend. Those are expansionary periods for the market. And you have days where the market contracts, which are basically range-bound days. More days are contraction range-bound days than trend days. What that ratio is, I don't know. If I had to guess, I would say that there are, you know, there's one trend a day for every 3 range days or something like that. And actually, it tends to be, for the most part, that trend days provide the most amount of opportunity, because you can recognize that trend and you can ride that trend. And today, and then on the Fed day though, the day after Fed days specifically, if normally it's like 1 in 4 days or something is a trend day, on the Fed day, it's probably going to be like in excess of 50% of the time. You know, probably a little bit better than 1 in 2 after a Fed. And I don't have these statistics. I'm just kind of, you know, guesstimating here based on experience and what I've seen. So you just have a much higher probability of the day after a Fed day being a trend day. It's very normal. And we were trying to prepare for that. And we were trying to guess, you know, which way it could be. You know, the Qs certainly had the potential, especially after Meta's earnings, to further overshoot on the upside. You know, starting in the mid 470s is where I really wanted to short the Qs, but I wanted to give myself the room to build into the low 480s just in case the trend day was to the upside today. So I actually did get some TQQQ short and caught a pretty good move on it, but it was on pretty small size. You know, I announced, hey, I'm getting into some TQQQ at 70 basically is where I got in. The high of the day in this TQQQ is 70.22. So I had a small position, covered some of it quickly, held some of it to like $66 or so, like half the down move basically. Probably should have trailed it a little bit better than that even, to be honest. So, you know, that was pretty good. The Meta short trade was actually pretty good. It was tricky because it broke that opening high, but it's still, I think, my best name on the day. Roku is probably my best name now. But you know, Meta was really my best name on the day throughout the day, also on the short side. So, you know, we wanted to be prepared for today to basically be a trend day. You couldn't be sure which way that was going to be. It could have been to the upside to continue things a little bit. There was definitely a little bit of a concern that we noted on the failed breakout in the IWM yesterday, because as we know, a failed breakout oftentimes leads to a fast move. We did note that maybe the failed breakout intraday had something to do with month-end rebalances, so maybe there's a chance you could still get an upside trend and you could go right back after that tail high and get back above 225. But a failed breakout pattern is a very powerful pattern that oftentimes leads to down moves. So, you know, the day begins, and the first 20 minutes or so, you don't really see with the IWM, but you can certainly see with the Qs. First 20, 30 minutes, we actually really tried to extend higher and move higher. With the Qs, with the SPYs, it was looking like the market was re-risking, and then we broke lower, and then we broke the opening low. Once we broke the opening low, things started looking a lot worse. Then we filled the gap, things started looking a lot worse. And the IWM, which never had the strength to begin with off that failed breakout, we had mentioned that a move to 218 off that failed breakout could reasonably happen. Well, we overshot that. We really overshot that. We went as low as 215, which is really a next support zone. You got some support here. The pivot low from July 22nd is 215.38. The 21 EMA is 216.25. So there is some support in that 215 zone that we eventually kind of held a little bit during the day. But this was a bloodbath. This downward move here in the IWM, this 2-hour move, slightly more than 2-hour move, was one of the most vicious downward movements I've seen at an index level in my whole career. One of the most. It was very orderly, but it wasn't. You can't even characterize it as a downtrend, which made it very difficult to trade unless you already had stock. You know, if you were shorting when I was shorting the Qs, you would have some stock for the down move, and maybe you could have rode it. But as far as actually executing it into that down move, this is very, very hard to actually short here. You know, it looks maybe like in hindsight, like, oh yeah, just short it. But it's not easy because there was no setup anywhere in here to short. There was never this. I don't even characterize this as a downtrend. The definition of a downtrend is a pattern of lower highs and lower lows. It's marked by pivot points. There is no lower highs in here. There are no pivot points in here. It is just straight down. It was orderly, but like steep orderly. Very, very hard. Like impossible to short. And you know, I've been doing a trade, and I was trying to, and this is even with me actually trying to be cautious with it, because I knew that the day after a Fed day can oftentimes be a trend day, where I wanted to be careful not to get stuck the wrong way, you know, buying a downtrend. But generally, as a team here over the course of the last several months, we've been able to do a very, very good job taking like these cuter little day trades where we recognize the short time frame extension, and then we come in and we go the other way, and you know, I implement this kind of cash flow strategy that I've gone over, with the target basically being the 80 EMA on the 5 minute, and you lower your target as the 80 EMA moves down. I spent a lot of time talking about that. It's honestly been a trade that's given me about a 100% success rate as long as I executed it properly over the course of the last several months. And that 100% success rate definitely broke today, because there was just never a tickle of the 80 EMA in this entire IWM move from 224 until finally at 217. Just absolutely brutal. So I did try to come in and buy the TNA for the IWM for that same cute trade that I've been having so much success with. And again, I tried to be conservative with it, understanding that the day after a Fed day can be a trend day. I don't want to be on the wrong side of a downtrend day on the market. But like I said, this wasn't even a downtrend, because all I needed was it to, if this actually was a downtrend, I would have been fine, because I would have had my extension buy, I would have liquidated the position in the 80 EMA, the pivot high would have come in. That pivot high could have actually been a short setup, because that's the other problem here. There was not even any short setups in this. That pivot high could be a short setup where you could get out of your long, potentially flip short. We've been doing a lot of that as a team recently, and it just never happened. There was never a pivot low, pivot high in literally that entire down move. And I almost, and especially for this time of day, I don't know if I've ever seen anything like that before on an index level. And it was brutal, and I got hurt because of it. And it is what it is, because I work in a game of probabilities. You know, it's a trade that overall has been very successful, and today that trade just absolutely and utterly failed. And you know, it caused me to just get heavier and heavier in certain parts, and I still actually was able to nail some really cute buy, sell, like quick scalpy buys and sells in this area on the way down where some of these tails were. But I hate to even pull up a 2-minute chart, but this 2-minute chart, 80 EMA, this is crazy. This is crazy for a 2-minute chart 80 EMA on an index to hold from 950 till 1150. I don't think I've ever seen that before. I really don't think I've ever seen that before. That downward movement was so heavy and so accelerated, it was insane. And I was saying it at the time. I feel like what you saw here in this IWM is like a 1 in 1,000 situation. And guess what? The 1 in 1,000 situation happens. I'm on the other side of that 1 in 1,000 because the other 999 times, and it happens to be that 1 in 1,000, and the trade doesn't work, and I followed my game plan for it, but I got smoked on it. I got smoked on it. Ended up covering most of the position for a loss at a certain point. I did keep a little bit of it, which I'll try to work out of a little bit, but see what the next couple of days look like. But it just is what it is. Just absolute smoke show here on the downside for the IWM. This daily candle, this bearish engulfing candle on the IWM is brutal. It's nasty. It puts the Russell in the penalty box for sure. We saw the VIX spike, I think, increasing correlations again, where everything was able to sell. And that's actually been my worry, is if the VIX, I'm looking for weakness in the Qs. I spent a lot of time talking about that. I'm looking for weakness in the Qs, but my base case assumption is that weakness in the Qs actually leads to the IWM holding in. Maybe not really continuing to break higher, but at least holding in. That thesis goes out the window if the VIX really is able to continue higher and you lose more of that gamma, which we saw gamma was pretty much sitting at 0 coming into today. You need that high SPX gamma to have the dispersion trade where selling in the Qs leads to the IWM holding and being bought up. And gamma's at 0, VIX accelerated, correlations increased, and it turned into just a brutal sell everything type of day. At the end of the day today, the IWM, including any after hours action, is down 3.3%, and the Qs are down 2.9%. Just brutal across the board market selling, and that's it. So this is a very damning candle. This is what I call a penalty box candle for the market. It's a negative Maribozu engulfing candlestick. The bears are in short-term control here. We haven't lost all of our key support levels. We really haven't, so we can maintain and watch this 215 area to see if it gets held. We have a big jobs number tomorrow, which we'll see how that influences the market, where it gives relative strength, where it gives relative weakness. But for the moment, the Russell here is in a penalty box, and while my thesis has been to continue to look for the rotation trade, I think that the technicals just said that thesis for the moment is off the table. And, like I talk about a lot, I'm a big believer in having a thesis, because when the technicals line up with your thesis, that's when you're going to have the most conviction. When you have the most conviction, that's when you'll put on the most risk. And when everything lines up, that's when you're going to make the most amount of money. So for me, when I have competing things going on, I have a bullish thesis, but the technicals are bearish, I'm going to go with the technicals until something changes and the technicals prove themselves a little bit better. And right now, the IWM has to get back above 224 to look healthy again. You got to negate the negative Maribozu. There's processes by which that can happen. It's a lower probability situation. The rarest way to negate this candle would be if tomorrow we're back above 224. Not impossible, very low probability. More likely if, and again, it's an if-then statement, more likely if we are going to negate this negative Maribozu, you need an inside and up, or you need a break of the low, a tail, and then you tail back up. And then off of either that tail or off of that inside candle, you can go. Tomorrow's also a Friday, and there's a lot of saber rattling going on worldwide. We saw some scary headlines coming across the tape today. And we've seen in previous situations, in these moments of geopolitical uncertainty, that the market tends to sell Fridays. So we'll see if that happens. There's still a lot of moving parts tomorrow between the important jobs number, but otherwise, you oftentimes, when there's geopolitical uncertainty into a Friday, see weak Fridays because market participants don't want to have the risk over the weekend. So that's concerning. The IWM technicals are concerning. The Qs look bad, but they already looked bad. We got the higher low, and it's not confirmed with a new low yet, but looks like we got the higher low that we were looking for into the area that we were looking for. It was a good short up there. I hope some of you guys caught that short with me. I hope some of you guys held that short really well. I hope you held it even better than I did, and I thought I held it pretty well. But this market is not looking good. You know, we analyzed that QQQ monthly chart that I think Jim posted after hours yesterday. 440 seems very reasonable when you look at that monthly, and when you look at this daily is very broken. It's trending down. This looks like the next pivot. So today's highs are actually very important going forward, and you want to know them. You want to remember today's highs. Bulls are in the Doghouse. They're in the penalty box until and unless today's highs can be breached in the SPYs, Qs, and the IWM. If that were to happen, all of a sudden we're going to be looking at a very different picture. But again, just to reemphasize, that is now the lower probability situation. It's not the impossible situation, it's the lower probability situation. Unless Tim Apple can save us, or unless the jobs number comes out and moves us in a positive way. I don't even know what the market would want from that jobs number at this point. So yeah, just brutal day. Risk management is so paramount in this business. It's the key to success. You'll have days where you're going to be wrong. You're going to have days where your trades fail. I definitely had trades fail on my end today. I did not have a good day today. I had you know, really bad P&L for me today, actually. But it's part of the business. It's not going to be my last red day of my career. I can promise you guys that. It's how did you manage your risk? Did you follow your game plans? I'm not upset today at all about losing money. I'm just upset about one trade where I didn't properly follow my game plan, because that cost me money, and to me that's wasting money. It's not wasting money if I have a game plan on a trade and that trade doesn't work out and I give some P&L back or I lose some P&L. I'm never going to be upset about that. What I'm going to be upset about, what I should be upset about, is if I make mistakes, if I deviate from my game plan and those mistakes cost me money. Because if I do stuff like that, that will prevent me from being a consistently profitable trader in the long run. And I did have one instance of that today, and it's unacceptable. I cannot allow myself to do that. I think that pretty much covers all I got. I think that's an important lesson, you know, really important lesson about how you need to approach markets in order to be successful. I am happy to answer any questions you guys have. Quick look at Apple. Apple's sitting in front of 220. Quick look at Amazon. Amazon off lows, but not looking great. Roku not bad. Snap off lows, but running into the after hours 80 EMA where it's struggling with that a little bit. All right, happy to answer any questions. I will, like always, try to take them in the order in which they were received. So I need to scroll all the way up to when we start the meeting and sort through the chatter. Again, of course, if I accidentally miss someone's question, please just repost it at the end. The first thing I see is from Vikas at 421. Did PMI drop the market today? I think PMI affected it for sure. I think it was more a hangover of the Fed yesterday, and then we know because we're looking at the CTA flows, we're looking at the systematic flows, we know that we are in an environment right now where the risk is to the downside from a positioning perspective, and if you break lower, which we did, it's a catalyst for further forced selling from a lot of systematic funds. So I think it's just a chain of events here where the market the market decided to put money to work by taking risk off the table post-Fed. You got the PMI that hit today, which seems like it, you know, impacted initially in the short run, and then you just hit a feedback cycle of selling that just blew the market out to the downside. Scrolling down here. Sorry, just scrolling through all the earnings numbers and chatter, just making sure I didn't miss any questions. Short covering and squeezing the short market. I answered Chad's question at 436 about tape reading. You can get into more detail on that if anybody has any questions. From Vincent, through print means it was lower than the bid, yeah, or higher than the offer. If we watch Apple, we probably won't have to wait too long to see it through print. I mean, here was one down here. On Lightspeed, which a lot of us use, through prints in your tape are highlighted. That last one just disappeared. So basically, the inside offer right now is $219.81. So if you were to buy, you should get 219.81. You should get the best offer. So let's say that the best offer is 219.81 and it's on NASDAQ, and let's say that's the only offer at 219.81, which is not true. There's also one on EdgeX, but let's say that it's the best offer at 219.81. There's only one offer. It's on NASDAQ. Well, if you buy and you route to ARCA, and ARCA's offered higher, are you supposed to get the higher fill away from the best market, or are you supposed to get the fill on NASDAQ at 219.81, even though you routed to ARCA? The answer is that you're supposed to get best price. You're supposed to get the 219.81 on NASDAQ, even though you routed your buy to ARCA. ARCA is supposed to receive that order, recognize that there is a better offer on NASDAQ, and then ARCA has to send it to NASDAQ, which by the way, you can get picked off by HFT robots who can sometimes steal that price if you misroute the orders. In those cases, when possible, and it's very hard, especially in a very thick, fast-moving stock, you actually want to try to route towards the offer that's there, because one, then there becomes no chance of a through print, but two is that there's no chance of an algorithm, an HFT algorithm, reading the order being as it hits ARCA and is resent, and then basically going in a straight line instead to NASDAQ to take NASDAQ and then re-offer a penny higher, so that they basically beat you to the order, and then you get a slightly worse price. So you actually do want to try to route to what's there if possible. Most of the time in fast-moving stocks for hand traders, that's going to be impossible. So you just do the best you can. I don't get that crazy about it. But what can happen sometimes is ARCA receives that order, and again, there's a better offer on NASDAQ. ARCA is supposed to receive that order and send it to NASDAQ so you get the best order. There's through prints right there, 219.85, 88, 90. And that 219.90 is selling on ARCA, by the way. You see the 12K and 12K prints going off when ARCA is only showing 300 shares at 219.90. So there is a hidden seller on ARCA at 219.90 right now. That's important because we don't know how much he's there to sell for, or she, but we know that he or she just sold at least 25,000 shares there. Is that about the end of the order, or is it 1 million shares to sell? You can't actually know because the person's working the order in such a way where they're hiding it. But I can read there. See that? Look at those orders that are all going off. Actually, 5K went off on NASDAQ. 4,700 went off on NASDAQ. But there was also a bunch more 219.90 orders on ARCA there, and ARCA obviously didn't break. So we have identified now a seller at 219.90 in Apple. That's something where back in the day, I don't really trade tape too often like this anymore. You could recognize that and short off the 219.90, short for a few pennies risk if you're quick, and then if the 219.90 breaks, you would hit out of the trade for a loss. But then if, like in this case, that seller's dropping down, or the stock itself is just dropping down because people just bought 219.90 and then they're out of the money, so they're forced to sell. You can then be coming on the bid to take advantage of that and to cover your short to be able to make money. Anyway, I digress because that was just an interesting thing that we just saw on the tape there, talking about through prints. So in my case, if NASDAQ is the best offer and you route to ARCA, ARCA's supposed to send it to NASDAQ so you get the best offer. Sometimes ARCA fails. In theory, it shouldn't happen. In theory, it's actually a violation of Reg NMS, and technically it's even illegal. But I don't think that they prosecute that because it's just data limits. They do the best they can. We're talking about a stock market that has billions and billions and billions of shares exchanging hands. Apple alone has had 58.5 million shares go off today. Multiply that by, and there's another through print on the bid there, multiply that by every single stock and ETF that exists, you're going to get through prints from time to time. They're a pain in the ass because they'll trigger your stop. And that, to me, that's one of the most frustrating things in the world, is if you get a stop that triggers when it actually shouldn't have triggered because it never really got to that price. It was just a through print that went off and triggered your stop. you'll notice that if you ever have a stop loss out and you get price improved on the stop loss, it's probably because a through print triggered the stop, and then your stop got you the best price that was available, which was actually even better than where your stop was. So that's something you want to take note of, and sometimes you want to just take that stock back, pretty much immediately, pretty much right away. So yeah, appreciate the question there, Vincent. I hope it helps. Where'd my VTF go? Cool. Scrolling down here in the virtual trading floor in the pro desk. Looking for more questions. Apple good enough, trading up small, beats on revs, iPhone beat, services beat. China's still down. Not thesis shifting. Okay. Qualitative guidance on the call at 5 p.m. So the call is currently ongoing. From David York, that was going to be my question. What do you do? You're always selling the lows to make money. I am lost where we were in the talk earlier, David. I apologize. I don't reference where the question is coming from or therefore how to answer it. So if you want to provide a little more information, I'd be happy to answer a little bit better. But I honestly don't really remember when I was doing the meeting portion of the meeting, what I was talking about when you wrote that down. So apologies. From Jason Cole, why do you think the IWM is doing so poorly despite plummeting rates? I thought Fed cuts and lower 10-year would be good for small caps. So sure. So June I thought was a very difficult month of trading because we underwent a narrative shift for the market in June. All of a sudden in June, this is not a new phenomenon, it's been 2 months now. All of a sudden in June, the IWM started caring much less about lower rates. And I said at the time, I don't think that this IWM move, which was triggered by the CPI, which went hand in hand with, lower rates starting to get priced into the market, I don't think that's why the IWM went up. I know that's what CNBC says. I know that's what a lot of, trading newsletters say. I don't think that the market went up on these 4 days and had this huge up move in the IWM because the lighter CPI meant lower interest rates. I don't think it even changed the narrative on interest rates, to be honest. And if you look at the TLT in mid-July, when that move actually came in, all the TLT did, just as a quick reference for interest rates, was get back to the same levels that it was at in June. It wasn't like everything got miraculously easier from a dovish, hawkish perspective. It wasn't like there was massive easing that was impacting the market that actually created this rotation trade. This rotation trade, and this is what the CNBC is not going to talk about because it's too complicated for them, was structural in nature to the market. It had to do with the overextension in the Qs by that point, the lack of participation in the IWM, which was at a record-setting number, the fact that we were in this environment still at that point where the Qs and the IWM were trading opposite from one another because gamma was so high that it was creating this dispersion trade. All that happened was there was a catalyst that reversed the dispersion trade, and Q sold off and the IWM went down. That had nothing to do with interest rates. In fact, starting in June, we started to see a decoupling of the interest rate IWM move. Up until June, it was very simple. TLT higher means that interest rates are lower, which means that the IWM catches a bid. All of a sudden, we were seeing news in June that was, bad for the economy, so good for cutting, so rates lower, so IWM should be moving higher, and the narrative had changed. So that narrative changed in June. It's continuing to be what is in play now. It's not that same relationship anymore. It changed. The market's caring more about the economy, and the rate cuts were the other thing that you need to realize, that the rate cuts were 100% priced into the market prior to yesterday. So what actually changed from the Fed cut perspective? But from Tuesday this week to the market closed yesterday. On Tuesday this week, the market was pricing in a 100% cut for September and basically almost 3 cuts for the year. Yesterday at the close, the market was pricing in a 100% rate cut for September, and also basically pricing in 3 cuts by the end of the year. It didn't change at all. It didn't change at all. So there is no benefit to the IWM on what's already priced into the market. The market moves based on surprises. What would have brought the IWM higher would have been a surprise where the Fed cut yesterday, which obviously didn't happen. And if anything, you could argue that it's like a buy the rumor, sell the news event. Everyone knows the cuts are happening. Everyone knows the cuts are happening. Fed says the cuts are happening. All right, we already knew. We already priced it in. We're taking risk off the table. But really, I think that this was just another de-risking day. And the difference between this de-risking day and the de-risking days that we saw in the Qs earlier in the month of July, or really, the middle to the end of July, was when the dispersion trade was still more of a thing before the gamma got unquenched. We went from record high gamma, which basically meant that you couldn't have all of these markets moving down together and having the SPYs hold in, and the SPYs couldn't break lower because into any down move, the S&P has forced buying. And now that changed. And this, by the way, Jason, is why market structure is so important. It's why traders need to be up early to do their research and to read Pat's note, because all the information's in Pat's note every day. All I do is read it and work hard enough to dissect the meaning of that information so that I can try to, as best as I can, explain it in layman's terms to everyone else so that we can all have an understanding of our expectations. Appreciate the question. Scrolling down here, next is from Bill at 456. Hello, Bill. All right, so the NASDAQ futures is 100 shares of the Qs. I'll have to take your word for it on that. So why does 100 shares of the TQQQ not give me 3x the profit or losses for the exact same period of time? Sure, it's because of decay. The way that levered ETFs work, the way that percentage math works, is that it's never going to be 1-for-1, and the more time that goes by, the more underperformance you will get from the leveraged ETF. So yeah, if you take a trade that lasts for like 3 minutes, the TQQQ on a percentage basis will probably give you exactly 3x what the QQQ gives you. But the longer your hold is on that trade, the less that will be that way. If you hold your trade for a month instead of 3 minutes, all the volatility that happens in the TQQQ over the course of that month may mean, I'm going to make this number up, that if at the end of the month the Qs are up 1%, the TQQQ is not going to be up 3%. The TQQQ is going to be up, I'm making this number up because really it depends on the volatility, 2.1%. I don't know, making that number up. Maybe even less. So again, it just has to do with how percentage math works. I think that this one, beyond that explanation, you can just dive into Google a little bit and actually read an article on how the percentage math works on leveraged ETFs to really see the math behind why it's impossible for a levered ETF to give the same return just at that multiple over longer periods of time as the underlying. It's a mathematical impossibility for that to occur. And it's also why I prefer to be short TQQQ than long STQQQ. If I want to short the Qs, I'd rather be short TQQQ than long SQQQ, as a general rule. Thanks for the question, Bill. Other Bill K, giving me SPX realized vol data in sample for August 1st, 2024. Okay. Gotcha. Thank you, Bill. From Rex on General Electric. Yeah, you had this call in the morning meeting and it was looking good in the beginning of the day, and then the market ruined it. And GE actually held in pretty well, all things considered. I went after GE today through the inside day. So Rex's trade here was based off the daily charts, based off this bull flag pattern. The ADMA caught up and he gave an inside day yesterday, which represents a period of tightening. So sometimes that tightening at the end of a bull flag can represent a great opportunity to be able to buy the break of that flag. So that's Rex's trade. And the high of the inside day, we want to know that number is 170, 175. And Rex brought this idea up in the morning meeting. He shared it with the team so that anyone here on the team could be aware of it and potentially participate in it. So we thank you for that, Rex. I went after GE today through the inside day high, which we just said I think was 170, 175. Yeah, so really nice momentum move. Yeah, really nice momentum move here in GE off the open in your direction. It had good earnings, right? That's the beginning portion, actually, of the flag on the daily chart is the earnings report. It was a good report. It wasn't able to continue due to the market selling off on the 24th and the 30th, but was able to hold above the 8 and 21 EMA. Yep, exactly, building up that flag pattern. I thought this was an A setup if this breaks through yesterday's high, but just keep in mind, I'm going to read the rest of your question, it's an A setup if you have the market assisting you, right? Because the market's such an important layer of probability, and the name wasn't in play today by any new news. But otherwise, I agree with you. I also really like the chart. I really like the trade, especially if the market could have helped a little bit further, which it obviously didn't. So you thought it was an A trade, so you traded with larger risk. Awesome. You sold less on your profit, so you were being very greedy with your game plan because it was a highly rated trade for you. I'm fine. I'm loving all of this. It turns out I ended up break even on the trade. Given the market sold off so hard today, which we didn't know beforehand, the SPYs and Qs were looking higher before 10 a.m. This didn't work out. Could you give me some feedback on this thought process, although the trade did not work out? Yeah, Rex, I think it's a great trade. That's my feedback. I think you executed it well. I love the game plan. I love that you were being selectively greedy here. I think that you did a really good job. In the morning meeting today, there was no way that we could know that this was going to be a downtrend day versus an uptrend day. We just knew that there was a higher probability of a trend day. So if this was an uptrend day, your GE trade would have been fantastic. Instead, it was like the worst day of 2024, probably the worst day in a couple years. So it basically doesn't matter what you bought. Unfortunately, it wasn't gonna work. Maybe there's a few earnings names today that were able to give some continuation, or maybe there's some strength in some consumer staples or something. But you know, for the most part, there was nothing that you could buy. William says, appreciate your honesty and market guidance. Thanks. No problem. I'm not sure if there was a question I missed, but yeah, absolutely no problem. Thank you, Chad, as well. From Tracy, anyone else leave a ton on the table with Meta like me? Meta was hard because it broke the opening high. I was able to stick with the trade. I was forced to reduce some risk, but I was able to stick with the trade to some degree because the extension on the ADMA, which is really what I was kind of trading versus to some degree with a core position, similar to that trade that I was talking about. But you know, beautiful short back through the 520, which we could not have communicated better at the open. It was literally the last thing I said as the market was opening. I think you can short Meta through 520 at the open versus like some sort of opening high. Breaks through 520, gives us great initial follow through, $10 worth of reward on that. I was looking for a little bit more. I was looking for a move to 507, but I covered more than 50% of my position in that move, and then it just started a strong bounce, broke that opening high. For most people, you have to stop yourself out by that point. Again, for me, I stuck with the trade but sized down on my risk. So now I was doing a little bit of a different setup here where I was sticking with the trade, but it's 10 a.m. and I'm trading more based off the 5-minute extension than anything else. So now instead of looking for a move to 507, I ended up being out by 512, which even that was probably a little bit greedier than I should have been. So Meta still during the day today was my best name on the day off that short, and I was out by 512. And I don't care that it went to 495. I don't feel like I left any money on the table because I had a very specific game plan that I followed for my trade, and it said I need to get out at this spot, and that's it. I'm out. So is what it is at that point. Like I said, I'm a big believer here for following your game plan. I said that yesterday with the Upstart trade. Follow your game plan to the letter of the law. From Todd, I'm in here for a trial. Unfortunately, I have not been able to spend much time here as I would have wanted to due to managing my positions. Just wanted to say thank you. You guys are amazing. Thanks, Todd. Appreciate you saying that. I really hope you enjoyed it. I hope to see more of you. From Tracy. I shorted this morning. I caught about 9 points, only to see it go down another 20 points. Why are they allowed to fill you when it wasn't where your stop was? I don't know. I don't understand the second question. But on the first question, I think you have the wrong mentality on the trade. It doesn't matter what the trade does beyond your game plan for the trade. It doesn't matter. I don't care if meta went to 0 today. I don't care if it went to 10,000 today. It does not matter. You set yourself up for terrible trading psychology if you follow your game plan correctly, liquidate your position as you're supposed to, whether that means for a loss because you manage your risk properly or for a gain because you manage your reward maximization of your game plan properly, and then see that the stock went in your favor further, and oh my god, I got shaken out and then it worked, or oh my god, I only caught 9 points when it went down 20 points. There is no one in this room, there is no one in this universe who is a perfect trader who can capture every top to every bottom and every bottom to every top. It is physically impossible. And if you start to strain your brain about, oh my god, I got shaken out of this trade and it worked, oh my god, I only made 9 points instead of 20 points, you are setting yourself up for having bad psychology to the point that it'll lead to failure in trading. So you really need to approach trading with the right mindset and the right mentality. The right mindset is not, oh my god, I left a lot of money on the table. The right mindset is, well, now that the market's closed, let me reassess the game plan and the trade. Was my trade a good trade? What were my layers of probability? How do I rate this trade? Based off of that information, as I view my game plan, was this the right game plan? You were shorting the strongest stock in the market that just posted a fantastic earnings report on a day when we potentially could have had a trend higher day. I don't think we would have saw Meta see 495 today if it wasn't also for the market getting destroyed. But the question that you want to ask yourself very specifically is not a question that says, hey, Meta went down $20, how do I capture the entire thing? The question you want to be asking yourself is, hey, did I have the right game plan for this trade based on the circumstances when I entered the trade? If the answer is yes, pat yourself on the back. You did a fantastic job. I do not care what the stock did after you got out of it. It does not matter. And again, you can set yourself up for really bad psychology that will negatively impact your trading overall if you think that you can capture every top to every bottom and every bottom to every top in trading. It's impossible. There is no perfect trader out there. The best traders are consistent. Consistency comes from good game plans. The question you should be asking yourself is, do I have good game plans that I'm implementing consistently in the market? That's the question. And I really appreciate the question, Tracy. I don't always play stops either. It's a thing that's tricky to talk about because generally I recommend for most people that they should have stops with almost everything that they do. Again, it's bad trading psychology to get stopped out of a position, see it work, and then be like, I should never use stops, or I should never have any risk management. So it's okay, and this is where my trading has evolved. I think it can be okay to not have a trade to not have a stop in a trade. Potentially very dangerous. And again, I highly recommend for new traders who are more on the entry level, I highly, highly recommend that you have a stop in for every trade that you take. And then if you hit the point in your trading career where you are skilled enough to be able to trade without a stop, there still has to be an exit game plan for the risk side of the trade. You have to have a game plan in yourself on how you're going to take that loss if the trade's failing for you. You have to have that. Today, I think my loss in TNA and the way that traded was literally a 1 in 1,000 situation. But it is what it is, and the 1 in 1,000 situations will occur. The question is, will a 1 in 1,000 situation end your trading career or not? And the answer to that is based in your game planning on your risk. Yeah, I'm not. Tracy. Obviously, I'm not saying that you're necessarily a new trader. I don't know you, but I'm answering the question in such a way that I'm giving you your answer, but I'm also trying to give the group at large, good information that they can go away with, because we've got a lot of people here with vastly different experience levels. Steve, your question on prop, email info@t3trading.com, and we can take care of it offline. I did not trade Carvana today. There's too much going on. Alright, looks like I got through just about everything in the VTF. Let me see if there's anything going on in the YouTube channel. Uvixi Bull, I took a trade long on the NASDAQ at the open, and I made money on it by covering risk and then putting my stop in at the wick of the 950 candle. Okay. Cute little scalpy trade. Due to this trade working, even though it failed, I decided my bias was long, and as a result, I missed this massive short today. I think it was hard. I really think the execution on the short was hard because of the way the market went down. Is establishing a bias one direction so that you don't get chopped up still the best way to go as a scalper? I don't know. I've always found that one of the most difficult things about trading is to be able to flip thought processes from long to short. Something I've always struggled with. It's actually something I've done better with fairly recently. Sometimes I think that if your thesis is wrong, meaning you were looking for the long side of the market, but really it was a day like today, sometimes the best situation is that you just managed risk well and didn't lose anything, and it doesn't matter that you didn't capture the down move. You were looking for higher, the market got destroyed, and you didn't get hurt. I think that's a really good job. Otherwise, then you need to be a little bit more mentally flexible and trade both sides of the market a little bit. Yeah, Cyril saying if the IWM holds even 210, it's still better than it was before July, and that is the truth. That is the truth. We'll see. Today was a damning day for the market, but we'll see. PB Freak also got smoked looking for a bounce in the Qs. He was very hard. Had a similar thought that I don't recall seeing selling like this before. Thought about taking the shooter at 11 o'clock, but I felt it was a FOMO trade and ended red on the day. Okay, I think that's okay. Yeah, the yen has been affecting the market also for sure. From Frankie, what do I think about Nvidia? Nvidia is similar to the Qs, but maybe relatively strong. Today is a bearish engulfing candle that created a pivot high at 120 resistance. Nvidia is in the penalty box until and unless it can get above 120, and you can just take the same technicals and apply it to the levered one NVDL. Yeah, great job. If you took long trades today and you're up P&L, that means that you did a great job with your game planning. Love it. Love to see it, and that you're disciplined with it. From William, if the only stock you could trade tomorrow was Intel, how would you approach it? I probably would go to the beach. I hate trading Intel. So I didn't look at the numbers because I honestly don't really care too much about Intel. So I would want to start by having a better understanding of the numbers. Intel totally breaking down on support here. This like $30 level is shot. Wow, look at this thing. Wow, when is this Lowe's going back to? Lowe's going back to 2013 in Intel. 2014, 2013, yeah, holy cow. Intel is so shot. So first of all, William, that's the type of question that I would assess more in the morning than I would in the evening. Because I would want to see how it's trading in the morning. I want to see how the market's gapping in the morning. I want to see how some of these stocks settle out. And I don't have great feedback for you. One, because I didn't even look at the numbers, and I haven't looked at Intel trading after hours here at all. This is the first I'm looking at it. So I would really need to see it in the morning. We can assess some of the after hours levels. Intel suspended their dividend. Oh, it's terrible news. The market does not like when stocks suspend their dividend. And there's the potential, depending on the language of that suspension, that any dividend funds that hold Intel will be forced to sell it. Because if your ETF or mutual fund or whatever is specifically about dividend harvesting, and you have a stock that says we're not doing a dividend anymore, they are then required by their mandate to sell that stock. That alone could create a lot of additional weight to it. Pat giving us here. Second quarter EPS 2 cents versus 10 cents gross. Revenue 12.8 billion versus 12.9 billion. Okay. Guides Q3 lower. Gross. Spends dividend in Q4. So spending the dividend just for Q4 is probably not enough to force the dividend funds to sell. It's just 1 quarter, but that's bad news. The market still is not going to like that. They're working on implementing $10 million of cost reduction program, including thousands of job cuts. Guides -3 cents versus estimates of 29. Oh my gosh. Intel has been so bad for so long. Revenues in this also. These guys are just behind, like they're behind. They can't keep up. No one wants Intel. Yeah, anyway, so there's no daily chart to speak of because we're at lows going back to 2014. There's no daily levels to speak of, so you really got to trade the intraday. 24 is important after hours. 26 was important after hours. There's like 25.15 to 25.50 is important after hours. So I would note the important after hours levels as potentially tradable spots tomorrow. Everything else held equal, I'd rather be short than long. But do you want to chase the 24% gap down? It's tough. So I don't know. I got to assess it further in the morning, William. So, but I hope that helps as much as it can. All right, I'm tired. It's been a long week. Pat kept me out too late last night. That's not that true. I was home by like 10. But that's late for me. I go to bed very early. I wake up early. Today was an insane day. It's been an insane week. Have a great night, everybody. Tomorrow there is no afternoon meeting. We don't do an afternoon meeting on Fridays, so it's the last one. But we'll be getting our research in at 7:30. We'll be getting Pat's note out at 8:30. If he's late, we'll give him a hard time. I'll be doing the morning meeting at 9. We'll be trading. We'll be talking. We'll be crushing it. So that's it. I hope everyone's learning a lot more than anything else. Hope we provided a couple good trade ideas along the way as well. But more important than that, I'd rather teach you how to fish and give you a fish. So just keep putting in the hard work, and that's how improvement in this business is made. I will see you all tomorrow.